So I wanted to start this off because my friend Chatstein, who's ChatGPT, I said beforehand when I came here, let me figure out like what is mergers and acquisitions and what is M&A really, okay? So I'd say M&A is really, and we could please sing along or state along like Family Feud, multiples and add backs. Okay, that's what we're basically doing. We're trying to find the multiple and the value of a deal, and we're trying to add back expenses that turn into a higher valuation, all right? We're putting a lot of myths and assumptions out into the market, which are hockey stick projections, okay? We're also looking at miscalculations and aftershocks, some things that we might not have thought of when we're starting a deal, and what's going to happen, how's that going to affect the process, or how's that going to affect valuation, okay? Mudslides and avalanches. If you're selling a business and the business doesn't perform during that period of time, we're going to get a lower multiple, or we might end up with no deal, okay? So M&A is also, when it closes, as my friend Cypher would agree, miracles and applause, okay? So those are the 5 things that maybe M&A really is. What I want to take you through here for a minute is what the industry used to look like back in the day when I started in 1999. And Terry was at Crunch, and Federico had his own clubs in Boston. And when you looked at the industry, you could actually say with a straight face, I'm just in the health club industry, okay? And it was dominated by Gold's Gym as a license. LA Fitness was just ramping up with equity, and they were building locations and boxes. They were at every exit part of California. And then you also had Lifetime at the time that only had 12 locations, right? If you look back here, Planet Fitness had 3 locations, right? Fast forward to 2024, 2025, and now we've segmented the market. And every one of these segments has their own valuations, has their own potential opportunities, risks, capital expenditures, and franchisors and franchisees. As we look through where the industry kind of came from, where all of these EOS, I want to invest in EOS, I want to invest in Vasa, I want to invest in Fitness Connection, okay? Newsflash, they're all Gold's Gyms, okay? The sign came down, somebody paid to put up a new sign, and now EOS just got sold for only $1.5 billion, right? Vasa's worth at least a couple $100 million, all right? One Life got sold for $525 million. So the owners of Gold's Gym back in the early 2000s were a group, there was a family office, and they wanted people to de-identify so they could get territory back. Gold's Gym would be the largest health club chain in the United States right now if it wasn't for that strategic ownership change. These are the valuation multiples that have happened in the sector. I'll keep this up there. I think you can get a copy of this afterwards for free, along with a copy of my book. But if you look at the multiples over time, all right, and look at where things are today, with EOS trading at 13 times, Crunch Corporate trading at over 18 times, right? There's a lot of investor sentiment that is at the highest level there has been. And if you have a diversity of clubs in a diversity of states, you're going to get a high valuation.